Good morning. Welcome to another full transparency trading session where I am your host, Sebastian. And today we're talking about part two of supply and demand, which is breakouts. On yesterday, we experienced a beautiful breakout. I'm going to select just this area here and we're going to talk about it. So, what is a breakout? Well, by definition, is very simple. A breakout is when price moves above your resistance level or below your support level. Now, resistance and support are completely subjective. Everybody uses a different resistance and support. I can't tell you what to do with yours. You're going to find that out as time goes on. However, supply and demand or market structure is slightly different from support and resistance. And that's why I use supply and demand trading instead of support and resistance trading. Support and resistance trading will get you some great entries and some great trades as well. But majority of the time, it's not the overall market structure. So there's way too much wiggle room to one side or the other for you to be in a really great trade that you can hold for a long time. Now, as we discussed with breakouts, a breakout is when price moves above resistance or below support. So our breakout for yesterday was when we moved below support. Why did we move below support? And that's a very simple answer to that as well. Well, because we could not retrace 50% of the overall move when we fell down. Here's the top. This is the move down. Here's 50% where this white line is. They tried to push it back up. And to help you understand what's happening when we're pushing down or when we're pushing up, I'll explain what's going on, what buyers and sellers are. So your resistance or your supply zone are your sellers. Your demand zone are your buyers. We pushed all the way up to our supply zone. And at some point in time, the sellers were like, we're going to have to slam this thing back down on them, right? So we push all the way up. We get this $3 range where a lot of selling contracts start to manifest. So as you get a bunch of selling contracts, you're going to get a hard push down. Boom, we push down, but the buyers are still there. All right, buyers said, nah, send it back up. All right, then they pull it back down. Then they pull it back up. Then they pull it back down again. Then they pull it back up. And then the buyers go, okay, fine. They let go because the sellers are coming down. As the buyers are pushing it back up, the sellers are pushing it back down, and they're selling from lower and lower points. And it is always easier to sell off a market than it is to buy the market up, which is why you'll have a lot of people have a bearish bias. And we'll talk about bias at some other time. I personally try not to take a bias into the market, although I have a clear bias, and you guys have heard my clear bias every single day. My clear bias is that we are trying to reach $610 in the market before the year ends. We reached $609.09 and we rejected. I still believe, which is my bias, that we're trying to reach 610, but I trade whatever I'm seeing in front of me. I react to what the market is showing me. If the market presents me a bearish day, I will trade bearish. If the market presents me a bullish day, I will trade bullish. I will trade with the trend of the day, but I still hold my bias. And that's kind of the best way to do it, in my opinion. If you hold your bias and you only trade days that fit your bias, what if it doesn't offer up your bias for a month? You know what I mean? But moving on. All right, so the breakout happens at 2 o'clock in the afternoon. So like I said, we couldn't make it past 50% of the move. This was the initial move. This was Monday at 10 o'clock. All of this stuff is pre-market and after hours and stuff like that. But Monday when the market was open, this is 10 o'clock. 10 o'clock pushed down. We came all the way down here. We went back up to 50%. All right. At 2 o'clock on Monday, we pulled back down to my demand zone, reacted out of the demand zone, pushed up. Came back down to the demand zone again, reacted to the demand zone, pushed up. And it's just like before. The sellers, every time we come down, they're stopping at a new point. They stopped right here, set up a bunch of sell orders right there, push us down again. Pull it back right there, smaller amount of sell orders. Pull it back right there, small amount of sell orders. Get us down to the basement, and that's where all the buy orders were sitting. A bunch of buy orders were sitting in here. We go from 56 all the way back up to 76, but we couldn't get back to that 50%. Why? Because by then the sellers had migrated down. So they migrated down below this wick right here, and once they got below that wick, they could push it down further. So now we're very easily re-entering that demand zone at 10 o'clock on Tuesday. We're pulling back up. 2 o'clock, we can't get out of it. Settle off some more. Finally, we get the breakout. Now, a lot of people will wait for breakout trading opportunities, which is fine. It's a fine strategy. I'll never knock any strategy. Whatever you use is fine. I personally don't like breakout strategies because it takes a lot of waiting for a potential move that may or may not pay off a decent amount. I'd rather just use supply and demand and take the momentum plays. I like momentum trading. over trend trading, trend line trading, and over breakout trading. I know some traders who only trade breakouts, they do very well. I know some traders who only trade trend lines, they do very well. I am 100% supply and demand trading. I am a reversal trader. So we break out, we go all the way down to 60.39. And how do you figure out where we're going to? This is where the subjectivity goes away and objectivity rules. There is a tell. There is 100% a tell as to where we're going. And this is how you read the market. You read the market when you're reading a chart left to right. When you're trading, you're reading it right to left to right. So now you know that we're going down. Where are we stopping at? We're going down, down, baby, Yo Street in a Range Rover. And we go from here, start looking left. Body of this candle right here was support. Okay, body of this candle was support, body of this candle was support, body of this candle was resistance, body of this candle was resistance. And then we go, oh, what's this? What's this over here? When we were pushing up, we had a massive rejection at 60.40. That is so weird. We rejected all the way down here, right? So if this was a massive level of resistance, what is it going to be when you get above it? Let's go and find out. Oh, snap. It's a massive level of support. It was a massive level of resistance. It becomes a massive level of support. We resisted and we fell back from 39 to 23. So $16. Guess what? We supported and we jumped from 39 to 53. It's crazy, right? It's crazy. Once you start to figure that out, you'll be able to take much, much better plays. So what I do is I wait patiently where we're going and I play the reaction. I play the reversal. When we went to the demand zone, you saw me earlier that day play out of the demand zone, make a quick $500. Eventually it did go to $2,000. I wasn't part of that, but then later on in the day, if you saw my TikTok, I took the trade from the downside, from the upside right here to the downside, and I got 1,000 of the $2,000 move, right? But I'm always looking for these reactions. And this is not the first time this happens. We are always 100% of the time going to revisit an area that we've been to before. And that area that was a resistance, that was a strong level of resistance, will become a strong level of support. An area as we're going down when the market is trending down, an area that was a strong level of support will become your resistance. So we break out of this and it becomes your resistance. This demand zone becomes your supply zone. So now you need to find the next demand zone. And I'm going to cut the video here because that's a whole nother video. But that is what breakouts are, and that is how supply and demand works. The sellers were up here, they push it down, the sellers migrated. Okay, this is where they're at now, they push it down, the sellers migrated. But it's just like releasing arrows. If you pull the arrow back a little bit, you're gonna get a little bit of a reaction. We pull up back a little bit, we get a little bit of reaction. Pull back a little bit more, we get a little bit of reaction. But we pull back a lot and we get a big reaction. Pull back a lot again and we get another big reaction. Pull back a little bit, get a little bit of reaction. Pull back a little bit, get a little bit of reaction. Pull back a lot, get a big reaction. Every time. Pull down a whole bunch, get a massive reaction the other way. I like waiting for those when I'm waiting for trades. So my afternoon trades are usually based off of stuff like this. My morning trades are usually based off of the current trend and the momentum carrying forward. You know, I'll know if we're going to hit resistance and we're going to resist and go down. I know if we hit support, we're going to go up. So I wait for the low of the day, the high of the day, resistance and support. But that's the end of this video, guys. I hope this taught you a little bit. If you have questions, please leave them in the comment section and I will answer them in a future video. The next video, we're going to continue forward with our supply and demand to help you understand basic market structure and how it can change your trading journey. You guys have a great day. This has been another full transparency trading session where I'm your host, Sebastian. Oh,